right, everybody, welcome back to another video here on Financial Friends. Today, we are going to be discussing 3 things that you can do in preparation of a recession. This is something we have been talking about throughout the course of this week. Check out the video that I made on Tuesday. I started off explaining a little bit about what this recession looks like, how we could fall into a technical recession, and then I picked 5 stocks I'm going to continue to buy. That video will be linked up above. Go ahead and check it out after this video. In this video, however, I'm going to be talking a little bit more on the personal finance / investing side of things, not so heavily on individual stocks, but more on the ideological type of things that you could be doing during this time. So without further ado, if you're not subscribed, go ahead, hit subscribe, hit the like button down below, and let's go ahead and get into the video. Number 1, you want to pay down high interest rate debt. Of course, right now, we're seeing a ton of inflation in this environment, 9.1% year-over-year inflation reported just a couple of days ago. So we want to make sure that as interest rates go up, in order to damper that inflation, that we don't carry high interest rate debt, especially mounds and mounds of debt through that period. You can see here on creditcard.com's weekly rate report that just 6 months ago, rates were sitting at, depending on where you were, 16.13% or so, and you can go down the list there. And now, July 13th, 2022, we're seeing interest rates a little bit over 1% higher than that, and even up from just last week. So rates are expected to continue to go up. You can see the quote here down below from CNBC. Global interest rates will likely continue to rise until 2023, when heated prices will hopefully, this is also fingers crossed, we're not 100% sure on this, will cool in response to the actions from central banks. This, of course, includes the United States, where I'm sure most of you are watching from. So carrying high interest rate debt, mainly credit card debt, but other types of variable rate debt as well, is not going to be ideal as that rate grows. You might not have as much extra cash lying around because of this potential recession, job losses, and other things that do come up, as well as your assets are going to be depreciated during this time. Normally, stocks and other related assets depreciate in price as interest rates do go up. Your interest rate on your credit card and other debt is also going to go up, meaning your payments are going to go up. Not a super ideal situation. Of course, I'm giving you something or telling you something without giving you different ways to attack it. You can go ahead, use Google, look up different ways to attack credit card debt. Things like the avalanche method and snowball method are great places to start. So go ahead and check those, type them in Google and check those out. Next up here is to build an emergency fund. We have a ton of different things that can come your way during a recession, mainly job loss, but other emergencies are always popping up. And there was a study done by Bankrate that found that 44%, or only 44% rather, of US adults had enough money saved up to cover a $1,000 unplanned expense. So this means, of course, that 56% of Americans did not have enough money to cover that expense. It can, of course, come from any number of things: major household repairs, car expenses, medical emergencies, job loss, the cost of living increases, which we have been seeing and been a part of as of late, and then sudden moves, whether that's for job location, divorce, etc., etc. A really big reason why people say they can't set aside money right now is, of course, inflation, which we're beginning to see. But the most important factor here is you're setting aside something. Everyone here on Finance YouTube recommends anywhere from 3 to 6 months of your expenses, right? So if, say, your expenses are $1,000 a month, this is just an example. I'm sorry if your expenses are much more than this. I know that many people watching this, of your expenses are going to be more than $1,000, but we're using it as an easy number to calculate. $1,000, that would mean you should have anywhere from $3,000 to $6,000 saved up. But just having $1,000, as this study shows, is definitely putting you ahead of the pack. So start wherever you are and slowly build up from there. The reason you want to have an emergency fund, you don't want to have to dip into debt, loans, or borrowing money in order to help out with an emergency. And you also don't want to have to sell your assets at depreciated prices. We just talked about how assets normally depreciate during times of high inflation, or at least during times of interest rate hikes. And so we don't want to have to sell at a loss or really sell anything when we should be looking to add to our assets because their prices are so low. And that leads directly into my next point: keep investing. Now is the time to continue to make investments in the stock market. It is the best time to get involved. Why? We're seeing the market down from all-time highs. In fact, you could see here different bear markets that have happened over time, and then there are bull markets that have since followed them. Look at those. They're not very large, right? We don't often see massive depressed stock markets. And so when a stock market is in a bear market, when it is depressed, we want to try and get involved, especially if you're just starting out. Don't be afraid to get involved. You should be excited. Right now is when wealth can get built. For an easy example, I've used this example hundreds of times, but it is a perfect analogy. You walk into a store, you see your favorite t-shirt, and it is $50. You say, wow, that is way too expensive, and you leave. The next day you come back, and that sweatshirt or that shirt is $30. It's $20 off. Are you going to walk away? Are you going to avoid purchasing it? No. You're going to buy that shirt. You might even buy 2 shirts or 3 shirts, and that is a prime example here in the stock market. Companies like Coca-Cola, Pepsi, any other type of company you can possibly think out there, Procter & Gamble, Johnson & Johnson, these big, stable, blue chip companies. Things with these companies have not fundamentally changed. And really, for a lot of them, they haven't fundamentally changed in years. These are companies that do the same thing day in and day out. And even big tech companies like Google, Amazon, Apple. These are companies that fundamentally have not changed over the past 5 to 6 years, and many of them are in tough predicaments now, but will be continuing to move out of those tough predicaments over the next 5 to 10 years. We shouldn't be looking at next year or 2 years from now, but rather 3, 5, 10, 20 years out, so that $30 t-shirt, that $30 stock, kind of using that comparison there, is a really, really good value when something that is not fundamentally changed is cheaper in price. So of course, always do your own research. Always go ahead, look up your own things. I just made a video on that not so long ago. So make sure you're doing your own research, studying your own stocks, and going ahead and doing everything according to your own personal financial situation. This is not financial or investment advice, but nonetheless, these are 3 things you should start taking a look at right now. Remember the snowball to avalanche method. Start small. It doesn't have to be a whole 3 to 6 months right away. Even $1,000 will put you plenty ahead. And remember, this is when wealth is built. Buying at all-time highs is the best way to lose the most amount of money. If you purchased right here at the very, very top and you went down, all you did was lose. If you purchased right here at the bottom and you continued to ride it up, all you did was make money. Of course, it's not that simple, but it can be that simple if you're utilizing ETFs and other diversified tools. Nonetheless, thank you very much for watching. I know this was a quick video, but I wanted to get it to the point and get this thing out there. I'm currently on vacation. I will be returning soon, so everything should be back to normal. Hopefully you didn't even notice anything was different. If you like this video, go ahead and hit that like button down below. If you made it this far and you're not already subscribed, go ahead and hit that subscribe button. We're on the road to 1,000 subscribers. Thank you very much for watching and taking the time out of your day. I hope you all have a great one. Take care.